Hello, everybody. My name is Bennett Tchaikovsky, and welcome. This is our third video in this corporate governance series. We're going to talk today about bylaws of a corporation. So my disclaimer and copyright notice, and this is extremely important, the information and opinions in this presentation are those of myself and not my employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. This presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever, or tax advice, none of it. Additionally, starting and running a corporation can involve in significant tax consequences there. Make sure you consult a tax advisor prior to making the decision to incorporate. Note that in this series, I'll be going over a variety of matters that relates to incorporation and how a corporation operates. You should use this video series to educate yourself on the topic rather than take this as any sort of legal advice. Therefore, the best way to use this video series is to learn about how corporations work and then go out and seek legal counsel. And this presentation is copyright 2008 to 2024 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. So I want to go through and now kind of talk about the bylaws. And the bylaws are not going to be filed publicly. And bylaws are generally going to be kept internally. If you order a corporation kit or through LegalZoom, they will generally give you generic bylaws for the state of California, but they are very important because they tell you how the corporation is going to go through and operate. And so what we're going to do today is we're going to look at two different examples of bylaws for a publicly traded company. The first one is going to be Facebook or Meta Platforms. And this was as adopted when they initially incorporated on July 29th, 2004, and as amended on April 28th, 2005, August 1st, 2008, October 26th, 2009, and March 4th, 2020. And so you'll see over here a table of contents, registered offices, other offices, meetings of stockholders. When do the stockholders meet, right? Because when we think about a corporation, right, in terms of how a corporation goes through and works, right, the basic way that this works is you have over here, you're going to have shareholders, right, who basically elect their representatives, which we basically call over here, we call this the board of directors. What does the board of directors do? Are they running the company? The answer is to a certain extent they are, but really what they're doing is they're basically going through over here and they are appointing possibly the two most important officers, which are going to be the chief executive officer and the chief financial officer. And when we are a publicly traded company, basically, does the board of directors hire a assistant to a director of the company? The answer is no. That's going to basically be handled by either the CEO or the CFO. And that's generally how it works. So the shareholders elect their representatives, which are going to be the board of directors. So when we look at the bylaws, now, how do the board of directors get elected? Well, they're going to have what we call an annual meeting. And if we were to go through and see how does this annual meeting work? Again, going to our friends here at Meta Platforms. And let's see here, exclude. Oh, no, hold on. Okay. If you look at, there's something called a proxy statement. And basically, this is something that when you are a shareholder of a corporation, you get to basically vote at the annual meeting, right? So you'll see over here the letters to our shareholders, the notice of the annual meeting, the proxy statement summary, all about their corporate governance. And so over here to our shareholders, dear fellow shareholders, date and time of the meeting, and all those different types of things. So when we look at the bylaws, right, and we'll just kind of run through this. So the place of meeting, so should we hold at any place within or outside of the state of Delaware as designated by the board of directors. So the board of directors is basically going to say, hey, this is when we're going to have our shareholder meeting. Now, if you are a one person corporation, you can kind of go like, oh, Bennett, how are you today? Oh, I'm fine today. How are you? Oh, let's have our meeting. And you'd want to go through and write up meeting minutes in terms of whatever you'd want to go through and resolve. So you're going to have an annual meeting, and you're going to basically go through and hold basically, basically going to go through and hold your annual meeting. At the annual meeting, what you're generally going through and doing is you're basically ratifying basically who the officers are. You're basically voting for the board members. You're going through and generally going to be electing who the auditors are going to go through and be. There might be other, so election of 10 directors, proposal, ratification of Ernst & Young, the auditors, an amendment to our amended and restated certificate of incorporation. God only knows what number they are on that one. Equity incentive plan, right? So if they want to increase the number of awards. And then you see over here shareholder proposals, right? So if you are again, this over here regarding dual class capital structure, this is basically why Mark Zuckerberg can never be not elected. But generating AI misinformation. And yeah, so you'll see, like, as a publicly traded company, you can get these shareholder proposals. And as you see over here with Meta Platforms, a lot of people are writing in about these different things. But I think they have to go through and put these up. There's probably a mechanism by which that goes through and happens. So there you go. You've got basically the annual meeting of stockholders. If there were, say, if Meta Platforms was going to be acquired by somebody, you could have a special meeting, meaning that we have to have this meeting to say that, okay, we're going to allow ourselves to be acquired by Google. So let's go ahead and take a look at Snap really quickly, and I'll put the links to both of these in below. Over here, registered office, other offices. Here it talks about a corporate seal, and then we've got stockholders meetings. So here you see this is for Snap. You're seeing like a little bit more of basically a little bit more meat. Now, just remember again that this one over here, this was done, this might be their very first one, and I want to say that this was done like a couple years after. So these are going to be evolving, and as they evolve, you say amended bylaws, right? But these were the initial ones. So you got to, actually, no, these are not the initial ones. These were adopted and then amended. So this is the latest amendment. So you can keep on amending these things. So we get the place of meetings, notice of stockholders meetings, manner of giving notice. How do you go through and give the notice? You got to have a quorum, meaning you have enough shareholders there to basically to make the meeting be effective. Adjourned meeting, when is the meeting over? Voting, waiver of notice. So all of these things really kind of go through and talk about, like, how you basically run your meeting. So this is telling you the laws of how this is going to go through and do. Okay. Now, when it comes to the numbers to directors, right? And what do directors do? Well, you've got a board of directors. They're voting on some significant things, but they're also making the hires of the two most important positions of the officers are going through and running the corporation, meaning the CEO and the CFO. They are appointed by the shareholders elect the directors. So coming over here, the number of directors constituting the entire board shall not be fewer than 5 and not more than 8. So now that Meta Platforms has 10 directors, this has obviously been amended, right? So these bylaws in terms of election qualification, resignation, any director may resign at any time upon written notice. So this is just kind of telling you about the directors. Now, the annual meeting generally is going to happen once a year. Special meetings may come up, but the board of directors, depending on what's happening, they're probably meeting at least for the audits or the reviews They're also going to be meeting from time to time to help to go through and to oversee the corporation, right? They're not involved in the day-to-day activity, but they're certainly providing guidance basically for the officers of the corporation to help the business move forward. So here you kind of go through and see like basically what are the powers of those directors, number of directors, qualifications, and this actually becomes important because when we'll do a later video that I forgot to copy down on this, but right over here, when we look at this, like these parts here, like the audit committee, the compensation committee, nominating and corporate governance committee, when you have an audit committee, you have to have what we call a designated financial expert sitting on your board. I presently serve in this role for, as of July 18th, 2024, for a publicly traded company. When you go through and do this, you have to basically self-attest that you have the ability to go through and read through financial statements and have a certain amount of beyond financial literacy to help out the company. Don't have to be a CPA, don't have to be an attorney. Rather, it can also be based on your experience. So this is really going to kind of talk about like, okay, the board of members can meet by telephone. A lot of times it's better to meet in person, but you've got regular meetings, special meetings, notice, and just again, quorum, waiver of notice, board action by unanimous written consent. So if the board, if it's a very routine matter and counsel basically says, hey, we're not going to have a meeting, rather we just want you to go ahead and, here's the information, do you feel comfortable with signing this? You can do that by what we call unanimous written consent. And fees and compensation, and that's going to be set by whoever the expert is you bring in. Approval of loans to officers, removal of directors, chairman of the board of directors. And so again, this is really kind of telling you about how the directors, what their function is and what they're going through and doing within the corporation. So here for SNAP, we should see something over here, Article 4 directors, right? So number of terms, vacancies, removal, meetings, quorum and voting, committees. And so you have all of these different parts. Okay, so now that once we've gone through and kind of talked about the directors, now we're kind of going through and talking about the committees. If you are a privately held company, you're not going to need to have any sort of special committee. However, if you are publicly traded on the NASDAQ or the New York Stock Exchange, they will mandate that you have an audit committee, that you have a compensation committee, nominating and corporate governance meeting or committee. So you're going to have these different committees that are performing some very important functions for the corporation. I'm going to make separate videos on those at some point in time, but you can form special committees if they have to go through and investigate something. But again, a lot of times though too, the audit committee has to be held by independent directors. Mark Zuckerberg cannot serve on the audit committee because he is not independent, because he is the CEO of the company. So there's a really important balance in terms of why do you have, when you have a director in terms of what they're going through and doing. So coming over here, officers of the corporation shall be a CEO, president, and secretary, and a CFO. At the discretion of the board of directors, more vice presidents. But again, you're generally going to see that the officers that basically you're going to have the board appointing one or two or maybe three people. And then those management, we call management, they're going to go then and then basically hire other people. And officers generally, the CEO and the CFO can basically be hired or fired by the board of directors. And that's pretty much what one of their big job responsibilities are to kind of go through and do. So as we come down over here and see this over here for the officers for SNAP, we see over here 10-year general. And again, it's just kind of talking about what, the board of directors may delegate the powers or duty of any officer to another one. Again, there's a lot of leeway in here, but that's really kind of what we're going through and doing. Okay. So indemnification of officers, directors, employees, and other agents. This is actually also very important because what you're going to be going through and doing is that the corporation will indemnify the officers for any action they may do. This is also the importance of having directors and officers insurance, right? So the corporation may purchase and maintain an insurance on behalf of any person, is who or was a director, employee, or agent at the request of the officer or director. So over here, then we've got records and reports, maintenance and inspection of records. That's a requirement that if you are holding meetings as a board of directors, you do have to keep minutes of those meetings. And because also the shareholders can come in and ask to go, or counsel can go through outside counsel. If they're being sued, you can ask for those records to be produced. General matters, checks, stock certificate, partially paid shares. This is kind of just a laundry list of like other stuff that's kind of going down over here. It's going over here, amendments, and there you go. So let's go through. We got shares of stock, transfers of stock, fixing record dates, other securities of the corporation, dividends, fiscal year, indemnification. So again, it's really kind of talking about really how the corporation is going to basically be going through and operating loans to officers, annual report. And this is an amendment basically to those bylaws. And there you go. So as you kind of see with the bylaws, they're really telling us really how the corporation really operates really within this realm. And that's really kind of the purpose behind those bylaws. The other thing I'm going to just share with you about bylaws is that if you are a professional, like if I'm a CPA or if I'm an attorney, the Board of Accountancy. So say if I create Bennett Tchaikovsky and Associates CPAs and I incorporate, and the title infers that because I'm using my name and associate CPAs, and I'm going to have more than one CPA working with me. So in my bylaws, I more than likely have to have language that expressly says that, hey, if you have somebody else other than a CPA, a non-CPA, cannot be a partner of your corporation. So when you are a professional organization, you're going to have very specific bylaws that will say, oh, if you're a law firm, only licensed California attorneys can basically be members of that firm, whatever it might be. So that's also something to kind of go through and consider basically when it comes to the bylaws. So that's kind of an overview of bylaws. If you're going to be incorporated, and say if you're using LegalZoom, they'll send out that if you buy a corporate kit, that'll generally be sent out to you. And again, these are not being filed publicly. However, if you do become public, maybe you'll get previewed on the channel of the accounting professor because you have to go through and file these different documents. So hopefully this was helpful. I look forward to seeing you on the next video, and have a great day. I'll see you soon.